Hello everyone, this is Terence Tan, the I'm Possible Investor. Welcome to my market summary updates and what's in store for the coming week of trading ahead of us in the week of September 21st, 2020. Now, so we are all shaken by the market right now because, the crazy up move in the market has now fallen from grace, and it leaves a lot of investors, new as well as experienced right now, in what we call a limbo stage right now, because based on what the market has told us and shown us so far, all right, we expect one, more volatility to come into the markets. Two, right now everything is uncertain because we are neither bullish nor have we really gone into the bearish territory yet. So everybody is kind of like playing a wait and see at the moment. Now, so what I want to do is I want to take you to the charts today, have a look a little at what the market may signal to us, where the potential probability lies, and if you're going into the market with trades, how should you go about doing so and protecting yourself, okay, as a trader as well as an investor over here. Okay, now, so let's get to the charts on my screen. What I'm going to do up front over here is to talk about the S&P 500 index. Now, the S&P 500 index has been very interesting so far this year. Why? Because yes, we had a wonderful rally all the way back from the lows at 2000, about 200 levels amidst the COVID market correction, right? And market has brought us all the way back up to a new all-time high. Not talking about the amazing rally that it has done from the bottom, because that's like 2,200 to 3,600 levels. That's like a crazy period where the returns are just nothing short of amazing, right, in a short span of 6 months over here. But what you need to understand is the S&P 500 is no longer kind of the diversified basket that we have all heard of, and the mantra that we say investing in index is always safe, right? It no longer seems to be so, because we are now controlled by 6 stocks in the market, right, or what we call the multi-trillion-dollar club, right, where the movement of just these 6 stocks alone, right, has single-handedly or six-handedly, I would say, pulled the entire market as well as the S&P 500 index up to the levels that we're seeing so far. Now, but you must understand, no matter how much you like the fundamentals, yes, these companies deserve to go up, right? But when anything moves up in an exponential manner, right, it leaves a lot of air pockets. It leaves a lot of air pockets on its way up, on the downside. Now, so if markets were to turn on them and they would start to fall out of the favor, right, you may start to actually see some problems arise that could, add a lot more pressure into the market itself. Now, so let's debunk all of this in this video. So I held a public session on weekends with stock nitpicking with IMP over here with Jeremy, right? And the session was kind of extended because I got carried away talking about the markets and what people need to be aware of. So I'm actually doing up this video as a separate thing altogether for those who really want to find out more about what you should be wary about. And let's cover this. Now, so what I want to do is I really want to look at the index as a whole from a longer term perspective. Now, why do I say this? Because if you look at the shorter term perspective, right, you can't really tell much from what you see right now. Okay, which means based on just the simple price movement of what you're seeing from my chart display right now, you can't really tell if the market is bullish, is bearish. It just kind of doesn't give you any indication at all. Right? But when you start to drag it to a further and longer perspective, right now, one, we can start to identify some potential threats, because if you look at this deep, thick blue line over here, it is none other than just the 50-day moving average. But used on a weekly chart over here, it then becomes a 50-week moving average. Now, so if the market is going to come down, right, there are 2 spots right now that we can pay attention to. One, it could come down and cycle to the middle line of this Bollinger Band, right, which happens to also be a moving average line. And that's like a 20-week moving average line, right? And that would set the index right at about 3,200 levels. So we are now looking at S&P 500 at about 3,320, right? So if it does fall lower in this weeks of trading, right, first stop, it could go all the way to 3,200, okay, from a longer term perspective. Now, but if they reach there, if they do actually reach there and they fall from it, okay, if they actually fall from it, what's going to happen is the next support doesn't come in to like 3,100 levels. Okay, now, so that's really going to be a concern because 3,200 is at least another 100 points away, right? And then 3,100, if it does get there in this week alone, right, it's going to set us back another 220 points on the S&P 500 index. Okay, now, on a longer term perspective, if it does break that zone as well, right, we could actually see it fall all the way to the bottom of the Bollinger Band, which is around 2,840 levels. Okay, now, why is this a concern for me? Right, it's a concern for me because many technicians don't really talk about this, but it is something you need to understand as well. If you look at this indicator that I have just right below, it's called the RSI. Now, the RSI is what we call an oscillator indicator. Now, all it does over here is this. It oscillates from an overbought territory to an oversold territory, and then it just bounces back and forth, right? So it's from 0 to 100, where the extremes on the low, it's at 30, all right, and the extremes on the high is set at 70. Now, so what's going to happen over here is if it does go above 70 over here, right, and it starts coming down, what people expect to do in a full cycle, that means a full trending cycle over here, is to actually come from an overbought level all the way down to an oversold level, right? Before, kind of the players are more or less flushed out, right? And then the buying can actually start to signal again. Right now, if you look at this, right, this actually happened to us in the month of Feb and March, right? Because we had the RSI over here, which was above 70, right? And then, it fell from like 74 all the way down to like 20, right? Amidst the COVID market correction, right? And that has actually brought the index from like 3,300, right, all the way down to 2,200, right? That's like almost a thousand points and more over here, worth of it. Now, but can you see almost similar event is kind of playing out because we did hit an all-time high, right? And one of the bad part over here is this. The market made an all-time high amidst what we call a declining strength in the indicator itself. Now, just to put it into perspective, think of the market as like a tug of war, right? Where the bulls and the bears are always constantly pulling on each other over here. Now, but if the bulls were to start to win this battle, right, you would actually expect the bulls to actually be pulling harder and harder, right, as they conquer their territory. Which means as they start to make higher highs over here, right, you expect that their momentum and their strength to continue if they're going to expect to gain more levels. But when that doesn't happen, all right, which is what you see over here, that means that as they start to climb, they are actually starting to get tired. Right? And even for example, just in normal terms and in sports as well, right? A tiring athlete, all right, it's bound to expose themselves to weaknesses over here, right? And their opponents are going to exploit these weaknesses. So the bears have come in over here, and now if they do exploit this weakness, right, we could actually see that the RSI oscillate all the way back down to the oversold territory. Right? And the last time this happened, right, it brought the index down by 1,000 points on the longer term chart. Now, who is ready to say that that's not going to happen? Now, I know many of you have this concept that the new tech, and they're making a lot of money, but you must understand sometimes that in the markets, right, it is all driven by sentiments. Okay, because markets, as we know, a famous term is the fact that markets are a voting machine until it becomes a weighing one. Right now, so a voting machine happens when they're driven by momentum, by fear, by emotions, by their thoughts in the near term, right? And then when everything is flushed out and things can come down, that's only when the weighing machine effect starts to come in. Oh, the market is undervalued. There's so many bargains out there. Oh, maybe I should start dipping my fingers in. All right, now, so the same thing that pushed all these tech stocks up could also be the same factor that drags them all the way back down. Yeah, okay, so that's just what I want to portray to you. Now, let me put the pieces of the puzzle together. Now, if you look at just the S&P 500 over here, we have this, kind of like support and resistance box that you see over here, right, which went from 2,700, right, to about 3,000 levels, okay? Now, and when the S&P broke out of it sometime in November last year, right, then it went to a new range of the 3,000 level, right, to a high of 3,400, right? That was before the COVID market correction. Now, of course, COVID brought the market down very, very quickly, right? So it got slammed down, and then during the recovery, we went back into this box, right? So you could see that the S&P 500 was channeling between this box over here, right? And then it did a false breakout like for 2 weeks, right? And now we're back into the box. So now that we're back into this box over here, we could clearly, just play along the fact that, on the upside, we may be capped by this 3,400 level, right? And then on the downside, we may be also capped by this 3,000 level over here, right? So, just tying back to what I said just now, the 20-week moving average is at 3,002, the 50-week moving average is at 3,001, right? And now you have a support level that is at 3,000. Now, so if the market wants to fall, right, it isn't going to be too difficult for them to get anywhere near there at all. Yeah, all right. So I hope, I just stress that to a point over here, because we have, the RSI signaling that it may be going downwards, right? We also have the stochastics, the slow stochastics, which is also signaling the same idea over here, right? That it's moving downwards over here. Yeah, okay. Now, so moving on now back to a shorter term perspective over here, right? So you could also see that now it's cut back inside the box effect over here, right? So we'll start to see it move up and down, channeling between this box, and nothing really can stop it in the middle of that. So, this gives a little bit of a stress, because if the market wants to sell off, there are potentials that, it could just do that. Now, and the next thing that I just want to tie in together over here is really this. The biggest, as I did in my session, the biggest one driving stock that drove not only the NASDAQ, not only the greatest stock that we've seen so far in this market that's happening right now, but also the entire S&P 500 index. Okay, it's really Apple. Right? Apple has been, nothing short of amazing, because during this time they're logging on record sales. That's all good, right? But sometimes the earnings can only get you this far, right, in a market that's already overinvested. Okay, now, so having a look at the market right now and tying in the S&P 500 and the Apple stock together, okay, what we're seeing is very similar effects on the Apple stock as well, right? And I'm looking at Apple from a longer term right now at this moment, right? And there is a problem. There is a problem because we do see that Apple from February, right, to where we are right now has gone on to make, new highs, right? It's pretty amazing new high levels over here, right? Justified. But the problem is, right, that the real traders are not coming in with newer strengths. Yeah, right. So that's concerning to me. While this stock is pushing at new frontiers, new levels over here, right? But the strength of the indicators are not following up, right? And now we have that divergence over here where it started to oscillate back down. Okay, and once it crossed these overbought levels, right, it's going to lead to technical traders, right, to be a little bit less bullish, right? Because even trend traders and momentum traders, once they see signals like that, they're going to pause on their overzealousness on Apple, no matter how good the fundamentals may be. Yeah, okay, and at every opportunity, they may even spot gaps where they would actually short the stock. Okay, now, so if that happens, all right, and Apple does the same thing, which is oscillate all the way back to the oversold levels, okay, we could see back in March, right, Apple went from like 84 all the way down to like 50. So that's, somewhere around the 20 to 25% levels, okay, 20 to 25% levels. Now, so, we have Apple that is sitting at 140 right now, and it's dropped to like 100. Okay, and that's already a 40% decline. Okay, 40% decline. But the problem right now is that despite a 40% decline, okay, I'm wrong, sorry, about roughly close to about 25% decline. Yeah, okay. Now, despite that decline over here, what's happening right now is the RSI has not oscillated all the way back down. It's still at a very high level over here, sitting at about 60. Okay, so if it does continue its downward move, right, we could see, that the 50-week moving average could be tagged, which is at $80, right? And $80 would signal that we have at least another $20 over of drop from Apple, right? And considering there's $100 right now, we could actually see Apple drop another 20%, right, before things may start to stabilize. it doesn't mean that the buyers are going to come back, because many would have been caught in this up move and they'll be left licking their wounds. So they're not just going to come back rushing in like they did before. Yeah, all right. So it doesn't mean that Apple is just going to start surging back up. Now, but one thing that's clear is that if Apple comes all the way back down and drops by like another 20% from here, right, it's going to weigh very heavily on the entire index as well. Okay. Now, so coupling these two things that I'm seeing together, right, gives me a lot of caution when I'm trying to go into the market. It doesn't mean that there aren't bargains to be found. There always are. Okay, but you just need to exercise a lot more caution over here. Right? So for those of you who have joined me on my Friday portfolio building with Terence over here, where we focus really just on great stocks and positioning our portfolio to benefit from selling portfolio put options, which is also a professional term called cash secure put options. Okay, but even doing so, I've chosen to close out many of my positions, and at least 50% of the capital that was actually invested has been liquidated back into cash. Right? Because what I'm doing right now is I'm just trying to be prudent, because the market doesn't really know where it wants to go. Of course, it could just bounce back up and hit our all-time high again, right? But at the same time, all right, volatility hasn't set in. Okay, now because as we go back over here, just have a look. If I go back to the SPX over here, okay, you can see that the SPX has been charging, all right, and then in the last 1, 2, 3 weeks over here, we had the sell-off. Okay, all right, we had the sell-off. Okay, and if you look at the SPX as well, all right, what you're seeing over here is that big slam over here, all right, and then after that, it's not been doing much. But despite the sell-off on Friday's sell-off was pretty severe before it bounced to the closing mark. Okay, but what I want you to see is then this. If we compare the S&P 500 to the VIX, all right, what you're seeing very ironically over here is that the VIX, all right, is actually down. Right, on Friday, right? As you can see over here, this is the one on Friday, 18th of September, right? Let me just zoom in for all of you, right? It's this green bar with the long tail that we're seeing over here, right? It actually fell, right? So, on a down day in the market, it's down still like about 30 points at the end of the day. We also have volatility that is down. Yeah, right now, so a lot of stock traders, a lot of trend traders who are talking about how you rechart and stuff like that, and then get an indication of where the next higher probability is, right? This is where option sellers or option traders can dictate a little bit more injection into what people are actually not seeing, right? What people are not seeing now is this, that most of the amazing rally has been driven by retail investors. Okay, I'm sure this many of you have heard of. It's been driven by retail investors who have been prying on these 6 counters, and because their accounts have been so small, right, they can't afford to buy these stocks. So what they've been doing is they've been plowing on all these out of the money call options. So they've been buying call options on Apple, call options on Facebook, call options on Tesla, call options on Google, call options on Amazon. So they've been buying and buying and buying. Now, so what's happening right now on the flip side is this. On the flip side, when the market comes correcting like what we have right now on Apple, dropping 20% in just 1 week, it's going to shake out the first tier of these retail investors. The first tier where they really have very small capitals, they're going to be flushed out because they have nothing left to lose, right? And they have to close their positions. Now, but you must understand the effect of options on the stocks or the stock market. Sometimes stocks lead option prices, but in extreme cases, options actually have the power to lead stock prices. Now, what do I mean when I say all this? It may sound a little bit technical, okay, but you need to understand this from a bigger, broad perspective, which is this. When these call buyers, okay, who have bought all these cheap or low budget call options, and now they're losing, so what they're going to do is they're going to close out their trades. Now, so when the retail investors go back to the stock market and wants to close this trade, right, what they have to do over here is they have to sell their call options. Now, what makes the market maker do over here is this. The market maker, right, has to buy it from you, right? Please understand that they have to buy it from you. Now, so when they become a buyer of the call option, right, what they're taking on now is this. They have the right, okay, they have the right, okay, to sell, they have the right to buy the stock. So that makes them a net buyer of Apple shares. Okay, now, so by allowing you to close your trade, okay, by taking your other side of your order, the retail investors, okay, now, so by being a buyer of the call option, okay, the market maker ends up with a buy Apple stock effect. Now, so what are they going to do then? Right? They're going to turn around and actually sell the Apple stock. Right? Why do they do this? You may be asking. Because the market makers are in the market not to predict the movement and try to make money. They're not traders. Right? They're just there to facilitate and try to make money from the difference in the bid and ask. So what they're going to do is this. They're immediately going to hedge the position. Right? Because right after your order, they're going to go out there to fill more orders. So they don't really have a lot of time to think. So just to hedge their position, what they're going to do is, okay, I'm going to fill your order. Immediately, they're going to turn around and sell more Apple shares. Because by making sure that they sell Apple shares, it kind of hedges their net buy position, right, with the order that they filled the retail investor. Right now, so can you imagine that actually what's happening right now is the very same players who have been driving Apple stock prices higher by buying all these call options in record number of contracts, okay, when they get out, right, they are actually causing their own demise, right? Because by selling the call option, the market maker ends up turning around and selling more Apple shares to square off that risk on their end. So, you realize that by selling all these call options, it leads to more selling in the actual stock itself. So this could actually drive Apple shares faster on the downside. Okay, and this is actually the concern that, is happening right now with options. Yeah, okay, all right, now. So this is what's really happening right now. And with the low volatility, right, everything is kind of not tying up. Now, so if I really want to get into the market, the one thing that I need to do is I need to hunt down profitable companies, right? That's something that I will do. Two, right, I need to make sure that right now, so far, these companies, right, have not been in favor by the market, right? That's something I also want to do, right, to protect my end over here. Now, three, right, I want to make sure that my exposure rate of my entire portfolio with the market right now, right, is potentially capped to just 30 to 50% levels. Nothing more than that, right? Anything more right now would be kind of like an overexposed rate over here. Okay, number four, right, I'm going to pick and choose, right, the timing of the entry over here. I'm not going to be overzealous and just feel like, oh, today feels like a good day. No, right? I'm going to use supporting evidence right now, okay, to kind of indicate that, this is a high probability rate, okay, where, we can actually go hunting for some trades over here, right, and looking for something to do. Right now, what do I mean when I say all that? Let's quickly take a look at some bargains out there. Okay, now, so we have this stock over here in the sense of Kroger. Right, Kroger is a very simple stock. It sells necessities. It's a supermarket, right, in America. Right, it has done well during the COVID period. But what has happened is the recent earnings announcement, right, and you could see why they're being punished. Right, the last earnings made them 122. Okay, and this time, okay, the market was expecting them to report at about 51 cents. Okay, but they actually did 73, so they did better, right? But they still disappointed on their projections. Okay, now, so they were being punished, okay, and they had quite a severe sell-off over here. It went down from 35, right, all the way down to 31. Okay, now, but as they were going down, I'm not prepared. I'm not prepared to get into this stock because the momentum of the stock, okay, was actually on the downside. Okay, now, so let me just draw this out for you. So when everything is still going down, okay, it doesn't make sense for me to get in, right, as things are still getting worse. But right now, as you can see, right, things are turning around, right? Okay, so things are turning around with the Bollinger Band, and now that the stock price has came back into the Bollinger Band itself, right, and then with the signals cutting up, right, and stochastics also look like it's crossing back up as well, right? Now, so this sets up a higher probability trade for me if I want to go long on this stock, be it with options, be it selling options on the long side. This is the kind of setup that I want, right? A great profiting company, right? Yes, profits may have dropped, but it's still a very good profit for a profitable company in a current situation, right? With brick and mortar shops, okay, selling necessities, the simple stuff over here, all right? There aren't going to be much bargains out there, right? But when you find them over here and the timing is right, that gives you the right setup to still create some good returns, right, in a market that we have amongst us. Okay, so once again, this is the summary over here of what I want to cover in the market update for this week. Now it's not the time to try to buy the dips, okay, especially in the tech sector. If you're trying to think of hopping on bargains, now is definitely not the time unless you have a really strong stomach. Okay, then I can't stop you. Okay, but this is a time to be very cautious over here. And if you do have short strategies, now is also a possible time to think about how you can capitalize on shorting the rallies. Okay, we have some strong bounce back rallies over here, and there have been great points so far to actually go on the short side. So if you do know some strategies like that, right, by all means, this is a period where you should short the rallies and not buy the dips. Okay, now I hope I brought you some perspective over here in your trading for the coming week. Leave us some comments if you enjoyed, or you take a differing view to what I have over here. By all means, we are all trying to benefit from this discussion. Right, leave your comments, and if you'd like me to cover some other topics, some other stocks, some other videos over here, right, drop a note, leave it in the comments as well, and I'll try to do them in the next couple of videos that I have lined up over here for you. Thank you, right, for watching this video. And if you have not subscribed to my YouTube channel over here, there's a subscribe button at the bottom, right? Just click on it over here, and this will make sure that you do not miss any next market updates or some strategies that I'll be covering, right, and posting them up on my YouTube channel over here. Right, this is Terence Tan, the I'm Possible Investor, signing off over here, right? And I'll see you at my public Facebook live sessions that I do now twice weekly, right? And for community members, I'll see you at live trading event tonight every Monday, okay? And we'll hop onto some stocks over here. All right, now see you everyone.